Let's get into today's strategy session. Geopolitical risk hitting stocks today as investors de-risk into the weekend and brace for escalating tensions in the coming days. All of this halting gains that were close to taking the S&P 500 back towards records. Joining us now, we've got Michael Reinking, who is the New York Stock Exchange Senior Market Strategist here. Michael, just give us first the pulse that you were sensing from some of your colleagues on the floor of the exchange this morning before you made your way here to our studio and what you're hearing from them right now.
Yeah, so thanks for having me back in studio this morning, Brad. Look, so I think we're seeing the typical kind of conflict playbook. This morning you're seeing equity markets move lower, oil prices, gold higher. But there are some interesting wrinkles kind of within that. You're seeing the dollar rally, but we're not even kind of getting back to the losses that we had seen kind of as of yesterday. Treasury yields are moving a little bit higher. Typically, you'll see Treasury yields move lower in kind of that risk-off environment. But you have that push and pull of how this is going to potentially impact inflation on a go-forward basis, right? So, the move in general, though, is pretty muted. If you look at the S&P 500, right, we're essentially unchanged for the week, right? So we haven't really kind of seen a significant drawdown. Markets are going to be in kind of a wait and see in terms of kind of what the response is, how that whether how aggressive that response is, and whether you start to see kind of oil markets impacted elsewhere within the region.
It's so interesting because this is a market that has really overweighted any semblance of good news that's come forward here. And one of the areas, even amidst this bad news that's transpiring right now, is what we could potentially see in any type of materials or rare earths deal. And one of the tweets social media posts that had come out this morning was from Donald Trump, President Trump, saying that he had given Iran a 60-day ultimatum to make a deal. They should have done it. Today is day 61. Told them what to do, but they just couldn't get there. Now they have, perhaps a second chance. All that considered, what is the likelihood that we see any type of deal unearthed at this juncture, and what would the markets even do with that information?
Yeah, I mean, so in terms of Iran, I think one of the surprising things was the timing of the strike last night, right? Yeah. So we were supposed to have negotiations on Sunday, right? Those are likely off of the table, right, at this point. So I think there was a little bit of a surprise just in terms of how quickly the strike had. But markets started to sniff this out a little bit, right? Coming into today, right, oil markets were up over 5%, right? We had the Atomic Agency say, just this week, also saying that Iran wasn't in compliance, right? So, I think markets have, somewhat, kind of sniffed this out a little bit, but, we're not necessarily kind of seeing kind of that big risk-off move at this point.
What are the hallmarks of that safe haven playbook that you were talking about, investors really thinking through and activating here this morning on the back of this?
Yeah, so I mean, we're in terms of kind of the safe haven move, right? We're kind of you're seeing kind of strength. It's not really a safe haven, but the obvious move into energy stocks, right? You're seeing travel-related names, kind of under pressure. And then you're seeing kind of some strength, kind of within that U.S. dollar. The U.S. dollar. I know you've spoken a couple times this morning, with some of your guests about the idea of the Mag 7 being kind of a defensive sector. We've seen that kind of over the last couple of years that investors have moved that way. And if you think about it from a perspective of, this isn't going to derail, kind of the AI demand that's out there, right? So it's sort of, insulated from any, from this sort of geopolitical risk, right? And we also had, kind of very, very solid numbers from Oracle this week, pointing to just the insatiable, kind of demand and kind of, that they continue to see, across that space.
I want to hit on two more themes while we have you here, or two more major topics that the market is really weighing through. One of them being what you and I were talking about in the break when you came on set, which is, we made it through this auction week for some of the 5, the 10, and then the 30-year bonds, and the 20-year, that might be a nothing burger when that comes about. We will see, but overall, we kind of were able to make it past that and still see a sense of demand, not just here, but also internationally here. I was looking at this chart from Apollo chief economist Torsten Slok, where he said that foreigners have reached record high exposure to duration in U.S. Treasury markets. What's the significance of that demand and the interest that we're seeing right now?
Yeah, and so I mean that was one of the concerns that we had over the last couple of weeks, right? We had seen kind of the weak auctions, kind of out of Japan, kind of trigger some more concern into our last 20-year auction. That's as we sort of mentioned off air, that's kind of an orphaned kind of product. So we had that little bit of volatility right after our last 20-year auction. But this week was very important in terms of seeing kind of very strong 10-year. The very strong 10-year auction and yesterday's 30-year auction. Next week we have some really big catalysts, right? As we move into kind of the central banks, we have the BOJ on Monday night. I think while they're expected to leave rates unchanged, investors are going to be paying close attention in terms of kind of if they try to use any rhetoric to kind of talk about kind of containing the recent move higher in longer dated yields, kind of there. And then obviously we have the Federal Reserve, who's kind of got a new bit a new bit of risk to kind of contend with after today's action.
I only have 15 seconds. One of our guests earlier had said we're in this wait and see from the Fed. That's what we continue to hear. And this event that's transpired overnight is the C. So what do you think is going to happen once we get to that mid-June meeting?
Yeah. So look, I think this adds a little bit of uncertainty. They're still in a wait and see. It's going to add some uncertainty for the Federal Reserve, right? They're not going to change their stance, right? I think the inflation data that we had seen this week was somewhat encouraging. There is some skepticism, right, looking at that data because we're not seeing the impact of tariffs, at this point. But what that does kind of help the Fed do is point to the idea that you've seen kind of the disinflationary process, kind of in place, kind of ahead of tariffs. Right. They may start to kind of set the table to, for a fall, rate cut. And by setting, I'm talking about kind of putting the tablecloth down.
Sure.
Right. July might be kind of the silverware and plates.
Interesting.
Right. And so I think you could start to see a little bit of softening of tone. But now you have this oil shock, which potentially will feed through to the inflation numbers as well that they're going to have to contend with.
Michael, great to see you as always. Thanks so much for taking the time.
Thanks for having me.
Certainly.